Welcome back to Ferocious Education. This is Ed. Today we're going to be talking about Volta charging, going with the ticker VLTA, previously known as SNPR. Now for this video we're going to go towards due diligence, technical analysis, and what I think about this one. So without further ado, let's jump right into this one. So Volta charging. This one previously was known as Tortoise Acquisition Core 2 and went with a reverse merger through basically the SPAC process with Volta charging. Now, this is the previous information from Tortoise Acquisition Core 2, and if you do remember, this company did also bring Hylin, Hyln, and we'll talk a little bit about their presentation that they did have forward, I think backwards in February. And this one here does talk a bit more about risk factors, transaction summary. I'm going to skip to the most important parts for me. The first off is the battery cost curve decline. So electric cars will be cheaper than gas cars beginning in 36 months, and that is something to be anticipated. And they're basically preparing for a future for charging at perhaps a more efficient or a cheaper form. And let's go through that together. So for US passenger electrical vehicles, you see in every kind of indicator that's increasing. EVs are more adaptable, and even things like Volkswagen, for instance, where 22 million electrical vehicles in the next 10 years and $91 billion committed. And for instance, things like BMW, Ford, GM, all having commitments in relations to all cars being sold being EV at a certain time. Later on as well, in different states as well, you're able to see in California, New Jersey, and others, by 2035, all new cars sold will be zero emission vehicles. And also you're able to see that there's disruptive stories creating new addressable markets, whether it's in retail, cable TV, travel planning, and everything in between. And the $500 billion of revenue will shift as fueling behavior evolves. So that $500 billion of 150,000 US gas station revenue up for grabs, that will probably turn out to US drivers clock 3 trillion miles per year, costing them $300 billion. While non-fuel amenities and services are also up for grab for around $200 billion. And if you're able to take a look into that $500 billion, that's anticipated to be $1 trillion annual EV charging related stores purchases, including out of that $180 billion in electrical charging, and that's basically in addition to $27 billion that would be the charging industry. Meanwhile, the rechargeable or reachable purchasing market is around $1 trillion, and that would be the Volta ecosystem in general, and I'll show you how. Now, in terms of the Volta model, so basically it has a different business model than your usual charging systems. First off, you have network development, they have proprietary data-driven planning, high traffic, high visibility, and premium partner locations, bespoke configuration, so full range of AC and DC product, land and expected development model, and revenue is public and private network investments, opportunities, rebates, and tax credits. It has a full funnel behavior understanding and impact, store choice and dwell times, product choice, and multiple revenue streams, counterparties that are secured with more than 10 years of contract. Revenue, network monetization that is independent of the EV adoption, turns on early and compounds with growth. Now, in terms of the charging operations, among the highest utilization and best-in-class uptime in the industry, and the most miles delivered per dollar invested, and the revenue, multiple revenue streams that index to EV adoption, for instance, such as pay-per-use, idle fees, managed services fleets, and carbon and other credit strategies. Now from there, you have Volta at Whole Foods Los Angeles. You're able to see that the Volta side components. First, you have the network development, so utility make-ready rebate program, other public and private network investments, and they have tax equity, charging operations, and behavior of commerce. And basically a layer of value with compounds of network growth, EV adoption, and brand awareness. And so some of the company highlights or timelines. So I'm not going to go back all the way from 2012, but basically that's where they started with the Hawaii pilot site. And around 2021, you have driver loyalty, Volta EU launch, pay-per-use, fleet, in-car partnership, and plug and charge. Now, in terms of return on investments on the current, the cumulative cash flow per station is currently seen to be somewhere after 10 years around $350,000. And you're able to see that after multiple years of development, that improved from a negative cash flow. So the current LT economics includes 3.4 years payback period and around 46% IRR, and current DCPS unit economics around 3.8% payback period. This one here relates to the impact of network effects on our unit economics. The payback period is expected to be less than 2 years here. Now, Volta site unit economics to site growth in value as EV demands on site increases. You're able to see, for instance, that the DCPS has 4 times media versus L2 of 4 times towers. These might be some technical terms, so I'm going to skip on to this. A network traction builds flyware velocity. So national scale leverage expects to turn around 10,000 screens. So currently installed around 3,014 screens, around 1,507 stations, and around 459 sites. With a contracted of around 2,200 stations, around 1,100, and sites around 471, with pipeline for around 20k stations, 10k, and sites around 5k. And in 3 to 4 years, line of sight development with existing station pipeline. And you have also a track of record underwritten by established partners and client success. And social good and commercial success intertwined, as well as they do provide basically a mean for marketing and networking, or just ads on their own platforms itself. So Volta's network planning tool predicts charging demand and economic social grid impacts, allowing Volta to maximize the efficiency and the impact of the network. So that could be massive as well. And EV charging demand is changing retail. Machine learning driven demand forecasting allows us to predict the current and future need in the charging services. Now, for market leading planning deliveries, the most miles per dollar invested. So you have around $3.1 million EV driver retail spend per year, and around almost 4,000 charges per month at 22 stations. And moving on from there is the network operations. So this comes towards the charging operations. So our award-winning user experience focused product family allows tailored site planning. So that's something that could be adapted to different parking lots, for instance. So unrivaled EV charging utilization, you have around 25 gigawatts of hours delivered, around 88 million free sponsored electrical miles, and 4.9 million charging sessions, at around 39 million carbon dioxide emissions offsets in pounds. And all charging networks sell visitorship. We deliver. So Volta, in terms of Volta California's network, you have 7 times more average charging sessions daily, 10 hours average hours of daily use, and 110 minutes average charging session length, as compared to 34 minutes in the other ones such as Electrify America. And from there, driver experience. First on, you check in, and then you charge, and then you go. That's easy as that. Now, in terms of behavior and commerce, so the only network designed to increase traffic and spend. It has 7 times more EV drivers attracted, more than 3 times longer stays achieved. When a nearby Safeway got free L2 Volta charging, I immediately switched grocers and haven't looked back. This was back to electric in 2019. So that was one of the comments from a customer or consumer. Media-enabled charging, so access to prime location, multiple advertising budgets, proving messaging efficacy, and full funnel behavior understanding impact of store choice, dwell time, and product choice. Halo effect raising consumer perception of the participating brands. And another thing here for Volta, it's dynamic media assets that unlocks access to multiple media budgets. First, you got the automotive endemic, programming, national agency, on-site content, and local outdoors. It covers all basically that except the on-site content itself. Now, real-world viewership digital measures, Volta helped us create awareness and trial in Volta-activated Whole Foods locations. That's an 35% sales increase from that alone. Now, both on-site and off-site, so you have solutions for those. And what they're saying, there's some basically anything from the gluten-free bar, like our partnership with Volta brought us really in many ways. It allowed us to successfully message shoppers in front of Whole Foods, increase our sales, and help us live up to the core values of certified B corporations. And market opportunities. You got around vehicle fueling for around more than $500 billion, data of more than $500 billion, and media of more than $170 billion. And it kind of sits right in there in between all these different fan charts. Now, in terms of momentum and policy in the US, you're able to see that policy would actually push in some places in states like California towards more of a greener and EV environment. And we believe our revenue is sustainable and stacks over time. As you get to see, by 2025, they anticipate around $826 million in long-term forecasted revenue. Meanwhile, currently, they're sitting around almost $47 million for the year forecasted. So in 2025, you're anticipating around 7% for data and other, around behavior and commerce 37%, and charging network to be 56% of the entire revenue. In terms of installation forecast and growth outlook, currently they are less than 3,000 charging stations. By 2025, they're anticipating around 26,242 stations up and running. Long-term gross profits and EBITDA forecast. This is massive. So you're able to see the long-term gross profit forecast. Currently, they are profitable on that term, and they're anticipating to increase their profits from $19 million this year to around $436 million by 2025. In terms of the long-term EBITDA forecast, currently this year, they're anticipating a negative of $30 million. However, by 2022, which is next year, they're anticipating to break even at almost break even at $1 million loss. And by 2023, they're anticipating to basically be positive at $33 million and up to $252 million by 2025. So that is important guidance on its own self. And currently, Volta's average 2021 to 2023 estimated gross margin percentage is 10% higher than the median EV charging competitors for gross margin percentages. And there's other things that we want to take a look at. For instance, the percentages and the shares of everything in between. So for instance, Pipe investors only got 14.8%. Tortoise 2 investors got 17%, and existing Volta shareholders will continue to hold around 64%, in addition to founders' shares being 4.2%. Now, currently, you're going to be able to see that the total proceeds and cash and etc. will be around $706 million in total, with a total enterprise value of around $1.4 million. Now, in terms of discounted future, and you're able to see the discounts in terms of a future value, this is relating towards economics, so I'm not going to go through that, but basically a discount for period at a 20% rate, that's a little bit too high. Usually it's around 5%. If you didn't understand what I just said, don't bother about it. It's a little bit more of economics that isn't really useful to stocks in general. And there's other comparisons and valuations in here and there, but let's move on. If you'd like to see more contents like this, make sure to click the subscribe button on the bottom right corner of my channel and leave notifications button. Also, don't forget to drop a like. So this is some of the billboards that they do have at their charging stations, as you get to see here. Again, each charging station can be customized. They also were shown on the news, and they did have some recent news as well, including putting in different locations, such as different places like installations in Yelm, Washington, and other locations as well, such as in Westfield. There's also some news, for instance, such as they launched Predict EV, which is product to power data-driven EV charging planning for energy industry. And we did talk about that AI data solutions in the presentation. Now, in terms of the latest SEC filing, we don't get much other than the usual once a company gets their new ticker and their proceeds. And in terms of institutional buyers, there's definitely some activity here that's interesting. For instance, Barrel Capital Management added around 7.8% of the total ownership here of this company on the 27th. In terms of other institutional buyers, it's a little bit mixed. Morgan Stanley on the 23rd liquidated half of their position. Generally, in the recent times, it looks mixed. So Morgan Stanley liquidated around 50%. Meanwhile, this company, Barrel Capital Management, added around 7.8%. Their total amount of shares is 2.7 million shares compared to Morgan Stanley. Current standing shares of around 80,000 shares. So there is some picking up from institutional buyers here and there. Still not a massive significant amount, but still looks promising. And from a technical analysis here, you're not going to be able to see much more than a single candle, so it's not going to be really effective to go ahead and do technical analysis onto this one. Volumes are not really strong into this one per se, but it's currently not moving much between the $9 and the $8.90, so it's currently stabilizing around there. But we're going to take a look into a bigger chart when the previous ticker was actually there, so this one here. But just a quick thing, this is a usual kind of flow for a SPAC. So first off, you got your letter of intent. The stock jumps and then drops, and then jumps a little bit before the official merger date, and then kind of tanks. Now this one's seen almost all the action here previously back in February. This is kind of almost a forgotten stock all the way from around April to the date that we have it recently. And currently there's massive volatility between the $8.70 or $8.85 to around the $10.50. And so the question comes in is, do we anticipate for it to kind of bounce back? Well, currently it's going to need a little bit of accumulation. So based on my experience with SPACs, very similar to this, what's going to happen is that it's going to go between $10 and around, I would say $7.50, $8, and it's going to keep on going back and forth until some good news comes out, or retail just says, hey, you know what, we like this one, and then it kind of skyrockets all the way perhaps to 20 or 17 and then drops back. Unless there is strong fundamentals. So when we're talking about strong fundamentals, we're talking about a very strong sales sheet and a very strong basically fundamentals in terms of book over price and stuff like that, or price over book. Now, currently, I'm not saying this one does have bad fundamentals. They are appearing to be on track to really improve their balance sheets, as you get to see. But by 2025 anticipation, this one is, if this is the market cap that is accurate, this one would be incredibly undervalued. Even though I'm not sure this is the exact market cap, the enterprise value appears to be $1.4 billion. So let's check quickly on Google whether it will show us the current market cap. So the market cap here appears to be $384 million, but that is again based on closing of August 27th on 5:19 p.m. And so if that is the case, it would be undervalued. But again, by 2025, if they do actually reach all these numbers that we're talking about, that would be incredibly undervalued and really profitable. But the question is, can they actually pull it through? Now, we don't have much technical analysis to go with just because the data points aren't really showing on the charts. But what do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.